morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, October 30th, 2025. I am Frank Ochoa, aka PivotBoss. Here's a look at the ES in the daily time frame right now. FOMC key level here, brand new from yesterday's session. Fed cut rates by 25 basis points, a bit of a hawkish tone, and so far on 4 various rotations after that price was taken offered initially, on 4 rotations above this level, we've seen rejections back down since yesterday afternoon, including 3 since the overnight reopen and overnight and pre-market trade. So that is a lot of rotations being defended at prices above the FOMC key level of 35.5 here. Do we see a little bit of a counter trade move here come into play? If so, that could provide another opportunity to defend and rotate this thing back up. One thing to keep an eye on here is the previous FOMC key level is down here, the September 17th level. Do we get a move that might return us back to that level and then return us back up to the newly printed 69.35 halves? So again, a lot of times how this can play out is the initial move away from a newly minted FOMC key level can take us away from the price. Once we see rejection, we can return back to the price to retest it. Same thing can happen to the upside if taken bid. So which way are we going to go? Right now we do have a 4-day narrow range, so not calling a directional move in any direction, just noting that the early rotations right now above that price are being rejected. We do have a downward bias here in the very near term right now, and again, still mostly in the range with an upward bias on the larger picture. So even if we get a little bit of a pullback here, it's still a swing continuation until proven otherwise. And lastly, big time upside levels by way of these key ranges. 70.72, that's the 100% target from the Friday key range. So any pullback, say we get a pullback into 6,800, 6,800 is defended, 70.72 could be the swing target down the road. We also have a much bigger target up above that we've been looking at in our trading room that takes us as high as 7,500 up above. That could be a big time 1 to 2 quarter target down the road. So 7,500 up ahead, but the very short term 70.72 could be in play. All right, looking at the NQ here. The NQ, a little bit of a weakness away from the FOMC key level as well. Multiple rotations above the level being rejected. The previous session's high being defended. Clearly a digestive day here heading into the RTH Open. 2-day range. 2-day range as well. Your previous FOMC key level down here at 455, 24,455. You have 26,255 up here as the current FOMC key level. Again, which way do we go first? Are we taking this level offered first and then we snap back to the level? That could certainly be in play. And if you look at the FOMC key level from September, this is how it played out initially. Took it bid first, found a reaction and rejection, came back and retested it here, and then bounced off the level. Then found rejection here and came back to the level, held the level on multiple rotations, and now rallied. So those levels can be incredibly important, and the market has a memory of those levels here. So how do we play off this current level? That's going to be the important thing moving forward. Right now, showing a little bit of weakness, but still very directionally bullish. We do have Microsoft and Meta weighing after earnings after the bell, and Google doing quite well after the bell, but the other two weighing down the NQ, perhaps heading into the RTH Open. Here looking at crude oil, you'll notice crude oil right here is working on creating a new key range here, and it's 59.28 to create this new key range, and that will be a significant key range for us moving forward. It has some awesome levels that really line up with some key levels down below. For example, our 54 market structure, that's right where the S25 would be here if price got into that zone for a great reversal here. The upside target, if we made it all the way up to the upside, 100% target would be the 69.23 level. So we have some big time potential here in crude oil if we can get those 59.28s. Right now, inside day compression for crude oil here, just 37% of average range, 36.6% of average range. Not a whole lot of movement here, but we could see things pick up with a move to one of the edges of the previous session. Again, I would say downward bias in the near term, heading into that 59.28 to seal off that new key range. All right, looking at gold futures, this one's down about 1/3 of 1% right now. Heading into the RTH Open overall, this one's trading at about 60% of average range here, 64%. You can see it's an inside day for the most part. I mean, it did get the low a little bit, but mostly trading inside day. Another 3-day compression. And to be honest, we're not seeing any signs of significant reaction or rejection. And really, we were forcing it here. That was holding. It was failed new low. There was a shot to go get the 42.09 level here to get us a new key range, and it just couldn't do it. Instead, it took 4,100 offered, dropped into the 39s we had to begin the week here, and now we're doing that pattern again. It's very reminiscent of the 3-day hold and go, 3-day hold and go, 3-day hold and go, and now we're seeing it on the downside. Are we about to see another flush to the downside up ahead? Very similar to this day and this day, which is opposite to the flow that we saw to the upside here. And you have to start perhaps looking at the FOMC key level below from September. 37.22 is the next 3-day move into that level. That's going to be a question we got to ask ourselves here. We can come over here to the ADR indicator, bring up a 3-day range here, and you can see the compression. Again, a high range 3-day compression, 144 points, 145 points, but it is compressed against the average 3-day range because the average has been pretty big here lately because of all the volatility. But if we do see something, just say average right here, that's a move of 245 points that could be ahead over the next 3 days. 245 points. Just say we fall right here from 39.45 and drop 245 points, that takes us to 3,700 and we hit the level. So it starts to line up pretty easily right here. So it looks like we're starting to mirror this thing on the way down the way we did on the way up because we have yet to find a strong low. All right, looking at the YM, this one's down about 1/3 of 1%. This one's also been trading mostly below the recent FOMC key level here, 48.007. You can see the early tail. The last FOMC key level was the September level of 46.388. Do we get a rotation back toward that level and then snap back to this level up ahead? And if so, it'd be very much in line with the recent pullback we've seen and the bounce. Pull back again and bounce and push through. So it'd be very much in line with the overall flow of this market anyway. But right now, certainly seeing a little bit more weakness than we have had in the last week or so. Still need to break through some key levels to really open this thing up to the downside. 47.5 would be a big break. If we can continue to hold that level, we could certainly bounce right back up within the developing 4-day ranges. All right, looking at Bitcoin, this one's down 1.8% right now and has seen weakness away from the FOMC key level to begin, 112.275, and this is below the September FOMC key level, which was 115.925. So lower FOMC key levels right now and currently taking it offered here. We did get this key range developed here, so we have a big time key range. Now, I gave you the bullish scenario previously, which was bounce it here off this green line, take it up here to the 100% target. That was the expectation. Now that we've gotten the bullish scenario here, what if this turns into a bearish scenario? That occurs through price breaking through the 97,870 in a transition style way and then opening up a move into the lower 100% target. Is 80 up ahead if we really start to pick up steam to the downside? Now, likely, well, either scenario could easily occur. We've seen it happen time and time again in Bitcoin, and both scenarios could provide tremendous opportunities. There could be this scenario that plays out. You may see this scenario play out and still make it to the upside target. So again, we'll see how Bitcoin responds once we get into those zones, but this key range means a whole lot for pushing us into those next levels. All right, looking at ETH here, this is the same thing with ETH. We're down 2%, down below the FOMC key level. We got a great key range here, and the downside target, if it were to see weakness, is 2571, an easy target, and that would line up kind of with this 2800 market structure level. That would be a tremendous opportunity from those levels. So we got to see how the market responds in this zone here moving forward. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.